The size theory will answer the question when you prepare to trade, how do you know when you prepare yourself to trade, how do you know the size of a trade to not hesitate about your entry and your take profit? And the answer to that is that you need to find major reversal zones, major daily reversal zones by doing the top-down analysis from the 12-month time frame to the daily time frame. And this will give you 100% certainty. So the first thing that you need to use will be the fact that the first principle that I want to explain to you is that anyway, the TS2, right, the TS2 validate the arrow of the reverse nodes. What do I mean by this? First of all, you need to understand that the size theory is about drawing these arrows of where the price will go. But these arrows are drawn inside zones where the price will turn down or turn up. So that is the size theory. The size theory is about drawing an arrow of the path of the trade from the entry year to the take profit at this level, from the entry year to the take profit, right? Or from the entry year to the take profit year. So that's the size theory, using arrows to draw the path of the trade. So how do you then know that you can actually predict the movement of a trade using these arrows? How do you know? Donc, so first of all, you need to know that the size theory, as I said, uses arrows, right? So now, the size theory will be using arrows, and inside those arrows, the arrows turns where there are zones like this, even here, when there are zones, okay? So when you use the time frame skipping by 2 method, right, you can be predicting the price to go up till this point and turns on a zone above, but Ishimoku tells you that Tenkan will turn a little bit before at this level, right? So between your arrow that you drew and said that the price will turn above here and what Ishimoku says, you need to use what Ishimoku says, right? Ishimoku is talking to you using the time frame skipping by 2 method. So why do I say it? Let's take, for example, the case on monthly that I planned that since we were on Kijun here, this one was the first Kijun touch. I planned that the price will go up and touch Kijun minimum before going back below the first Kijun touch like this, right? That's what I planned in my plan. But what happened in daily, right? What happened in daily is that, as you can see, when you go on daily, what happened here is that the price turned before at this level. The price didn't turn above here. No, the price turned at this level. Use when Tenkan daily bended to the downside. It means that I had a plan for the price to go and turn far above at this level, right? Far above at this level. But daily TS2 Tenkan said that no, turn here now, like this, right? So it's not just about predicting the market. It's not just about drawing arrows. It's about also knowing that the Tenkan daily on the place where you say that okay, there is a zone here, the price must turn down at this level, right? The price can turn before your the zone that you drew. And it is Ishimoku that will tell you that. That's what I try to mean. For example, you can predict, for example, that the price will move from this bottom till this Kijun before going back down, right? And now we are on daily. But it will only happen if in 1 hour, Tenkan 1 hour commas turns above on Kijun daily, like this, to the downside. But if Tenkan 1 hour turns just here at this level, right, and go below on TS2 like it is doing now, there are higher chances that this price will move to the downside. You see what's happening now. What's happening now? Like it means that this price will move to the downside, right? From this level. When Kijun is bending to the downside without waiting the zone that you do above. So when you are using this arrow, the idea is to let Ishimoku guide your next position, not to make you just blindly trade. Ishimoku will guide you. So let's go now to the next element, the hierarchy of lines. Let me try to check it. The hierarchy. So now there's an hierarchy of power. Like let us say, for example, if we go on 12 month, right? If we go on 12 month, let us say on monthly first. Let us say, for example, we go on monthly first, and we draw something like this, right? That is a monthly arrow of lines. Let us say of hierarchy of arrows. Let us say hierarchy of arrows. Mm, the monthly arrow, right, says that the price will move to the upside, then go to the downside at this level. You will see that weekly must obey to that. Like weekly must also go to the downside at this level. It must not be that you are saying that on monthly that the price will go to the downside like this, and then weekly goes instead to the upside. No, because monthly, weekly, and daily have power ranking, right? It is the it is the arrows of monthly that will guide the daily and the weekly, not the way around. Like daily cannot have more commanding power than the monthly. It means that you do not understand what we are doing on monthly. Okay. So there's an hierarchy. That's why when you start on 12 month, for example, there's something that's happening on 12 month right now, that the price fell down from this top. So till this Tenkan. What I mean is that we break this week, this green week, and this one was a reversal. That's why you see on monthly that after the break of this week, of that week on 12 month, everything fell down. because this one was above the V breaker on 12 month. So there's an hierarchy of reasoning and power, all right? Okay. So when we will be drawing 12-month arrows, like from this point to this point, right? Like this. It means that the price will follow this path from this bottom to this top, this way. And the price will follow it on four, on 3 months, for example. So let's go on and do it. But before reaching to that point, I wanted to explain this part of the I wanted to explain this part of, oh, let me try to, I wanted to explain this part. What I'm explaining here is that right? What I'm explaining on this part is that the SSB bounce V breaker or the SSB failure of it. Well, I'm explaining that I've already explained it previously, but I'll explain again. It's about having a volume to validate your arrows. Let us say, for example, I predicted the weeks ago that the price must go down like this on SSB on daily, then go toward the upside, right? That's what I predicted. I had this prediction this way, like the price come from here, tap down, then go to the upside. Okay, I had this prediction. Then now, what happened is that it did not work at 50%. So it worked at 50% to the downside then, but it failed at 50%. Why? So what happened is that, right? What I'm explaining on this part is that when you are doing these arrows and then you want to predict the future, the entries and the take profit, where the how the price will go, where the price will go, you need to understand that levels like SSB, like this SSB, have a huge opportunity for volume reasoning. You will not just use arrows for the sake of using arrows. You need to use also time frame skipping by 2 inside there to see if when the price are going down like this, will the price go back up and break this V breaker? If so, if yes, then in H1, Kijun H1 will stay to the upside. But when you go on Kijun H1 at that level, you see clearly that at that level, Kijun H1 did not stay upward oriented. Like Kijun H1 started to go upward to the upside at this level, but started also bending down from this point. Okay. So what I will recommend you is that right, when you predict the market and you arrive at when you do predictive analysis to trade, you arrive at SSB, at point like SSB, go on use TS2, right? And look at Kijun. Look at Kijun on the TS2, like on H1 here. If Kijun bend to the downside, it means that this SSB that was bended like this will be broken to the downside by H1 Kijun. That is what you need to understand. Okay, that's what you need to be aware of. Okay, you need to really be aware of that. Okay, so on this SSB daily, Kijun will be broken to the downside. Kijun will be broken to the downside. That's how you validate your arrow. So what you must do normally is that to validate some zone, you use TS2 to to be aware of where the price will go. Like on daily, for example, you must just do this type of prediction. The price is at this level. At this level, we just predict one movement like this, for example, on daily. And then at this on daily, when we arrive at this level, just look at Kijun H1 on this SSB to see if it will still go to the downside. Okay. So now let us look at element of the size theory. So let us start with the 12 month. On the 12 month, what do we have? The first thing that you need to look when you do the size theory, first of all, you need to look at the red bounce. What I call the red bounce is the red pullback, by the way. I also call it the red bounce, but let us call it the red pullback. That's what you need to look at first. Because as I said, the arrows that we are using are bouncing on some level of zones, right? The red pullback is the one of the first one. So so look at this. The price moved up until this level, right? Normally, when the price were at this top, the price must have come back and bounce directly on this green candle, but it did not. The price is now inside Tenkan, and normally the price must come and bounce on this red candle instead at the bottom, right? So we need to look at the red pullback to predict the arrow of the market of the arrow, the arrows, right? To predict the arrows. So to predict the path of to draw the arrows. So what we need to do is that the price the price will, from where the price is now here, the price will go will keep going down till this level before going up. That is the 12-month arrow path, right? So at the same time, we need to also look at the line theories and the volume theory. Also the Viche-Shimoku cycle, obviously. The Viche-Shimoku cycle obviously must also be considered. But bounces, because the price bounce on line, the price also bounce on Viche-Shimoku cycle zones, right? And you also use the volume theory to actually understand what can happen there. But if we lose the Tenkan line, normally we are on the first Tenkan bounce. So normally where we are now, right, the price can go up and do the break even, because on this 12 month, we are on the second Tenkan touch, as you can see. So we still have a lot of power to the upside on Bitcoin. But that's all for actually Bitcoin. But on 12 month, I prefer to make the price the new price go and touch the new red candle go and touch the old red candle at this level because of the bounce theory. So I take the worst case scenario, like the deepest case scenario. Now, after that, we do the same thing now on 6 months. So you go on 6 months and then you actually look at where is the bounce, the red candle where the new red candle can bounce on it is this one, like this, bouncing on it and then go to the upside. What can I do? So we have something like this, right? So this is the new one. So this is it, and then What happened is that the normally we need to also analyze the Vishay Shimoku cycle zones like and the Tenkan line. We only have the Tenkan line here, and Tenkan has already been touched like one, two, three, 4, 5, 6, 7. So we have 7 touch. So it means that this one is quite weak. Like this 7 touch is the quite a weak touch. So it may go a little bit deeper, right? Up until this level. That's why I take the red pullback as an option. So that's why I prefer to go deeper with the trade. So now, for the 3 month theory, for the 3 month, we are on a Kijun line. So we need to understand that first of all, we need to look at the red pullback. Where the line is now, right? Where the candle is now here, right? The red candle on the left is this one, this candle. So we can simply put on 3 month the price reaching that level of the red candle on the left. So that's the 3 month, right? So now we need to also to look at the line theory because you know that Kijun has the ability to like when the price touch Kijun at this level, right? The price has to move a little bit above Kijun, then fall back down below the first touch of Kijun. That's what happened now. So we already have the second touch. So now the price can also keep going up now a little bit above Kijun again, and then fall back down for the third time. So it can also be an alternative. So, but let me just take a line straight up to the downside like this for the 3 month. So now we are on monthly. Monthly, we don't have to use the red pullback now, looking left. So what we can do is that we need to understand that the price fell down below Kijun as the first Kijun touch. Then normally we need to predict the move that the price must go. The price must actually go down below Kijun like this, then go a little bit above Kijun as usual, and then go back down below Kijun for the second time. So that is literally the normal price movement. Okay. But in this case, this price did not go and touch Kijun again to the upside here. Okay. It, it is not bad what we predicted because this is what I predicted normally. But sometimes this one also happened. So you just need to be aware of that because that's the Kijun line. So from where the price is now right now, where we are now right now, because the move is already gone, that other move. So we have you know that the new red candle just broke and created a small wick just below here. So what are we doing with this? So what we can do is that the price can now go back up till the body of this green candle at this level, and then keep falling down like this. Okay, like this before going back, like falling down this way before going back to the upside this way. That's how you predict the moves. Okay. So now, since we are in monthly, what I wanted then now to tell you is that there is what I call what you can see that I call here TS2 inclination activate the arrow, even if it doesn't exactly match the arrow point or the arrow node. What I call the arrow point or the arrow node is those place where the normally the price must reverse, right? So so what happened is that right? What will happen is that right? We are on monthly. When the price will fall down, if the price on daily, they can bend down here before this arrow point, then we can start buying from the benzene of Tenkan. But if Tenkan go bend down instead below Kijun, below SSB, then we follow Ishimoku. What we will be doing on lower time frame like daily, we'll be following Tenkan bending. So when we go on daily, on weekly now, from where the price is now at this level, right? What we can say is that the price can move maximum till the up till this body, the body of this green candle, before falling back down at the same level of the monthly one. So now what happened is that when we go on daily from where we are, right, from where we are now, what you need to understand is that we need to use a vegetation cycle. And what we understand by vegetation cycle is that from this new trend, this one is the first Tenkan touch on daily. It means that since we are on the first setup daily, right? Now I'm using vegetation cycle, right? Think every 1 hour Tenkan inverted to the downside at this level is a good sell. And so we'll be looking at predicting the daily movement like this way, just like this, like from this point to just breaking below. We just predict like this, just to break this bottom, just to break this V. That's how we predict it. Okay, let's just say we predict it this way because when we go now on H1 on 1 hour, when we go now on 1 hour, what we see is that in that daily in that zone, that Tenkan daily, we literally have a 1 hour Kijun bending to the downside now. It means that we are already ready to go to the downside. So any Tenkan, any touch of the Kijun on 1 hour is a good touch for the price to for a sell for a sell. Okay, it's a good touch for a sell. All right, so that's what we got. So that's how you design those arrows, right? And now the cheat code. I wanted to emphasize on the cheat code on TS2. Like if you have a setup on weekly, anytime that you see a H4 Tenkan inverted, Kijun inverted, you sell. That's the same thing that we have on daily now. We have now on daily, what we have on daily now, we have something like this. On daily, we have this daily Tenkan, right? This daily Tenkan. Okay, that's the first Tenkan. So what you need to have as a cheat code to start selling is that as soon as Tenkan 1 hour now, that's what I call cheat code. When you sell the first Tenkan inverted or Kijun inverted, sell the first one. Inverted, Tenkan inverted, Kijun inverted, downward. You never miss it. So just sell the first one. Like you could have just sold the 1 hour Tenkan inverted here. This one, this part, you sell this one. The next one that you will be selling will be somewhere around the first Kijun touch during ticket cost like this. So that's the idea. So now, how to activate the size theory? So to activate the size theory, what you need to understand is that let us take, for example, the daily case that we had here. There are elements that activate the size theory. Let us take, for example, um, at this level, when the price started bending to the downside at this level, right? Okay. To activate the size theory at that level, you need to just remember. That's just a remember you for you to remember. It's not like something that you don't know. It's not like something that you don't know. You already know all of this. But I just remember you that that's how you activate the size theory. That's how you activate the size theory. So, so first of all, when you are at the beginning of a node like this, because that's where the price must have turned from daily, from the monthly, from monthly, right? So the price go down below Kijun, first Kijun touch, then go up, then go down. So that is like the monthly path. Okay. Now after that, when the price start to turn like this, so what happened is that from this level, right? If you go and start to trade, you can actually have elements that activate the nodes. Like for example, what I call here is like Tenkan inverted. Tenkan inverted, for example, inverted to the downside, right? Is a first sell. Like you can start selling here. You also have the reversal bounce theory. First of all, the reversal bounce theory that we could have used is the fact that you remember that the reversal bounce theory is that, what do I call the reversal bounce theory is that when the price is moving to the upside like this, right? Like it creates a V breaker here. Every the price that is here above this V is for the sell. That price is for the sell. Like you sell this one, right? You sell here. So that's what is also here that has been created here. So the price broke this V level, and then every this whole price here is a sell price that you should have sold like this. Okay. So now what happened also is that apart from this bounce theory, reversal bounce theory that mark your first sell, you also have the Tenkan inverted at this level, right, to the downside. Then you also have ticket cross to activate the node, right? To activate the node, you have also the new KSB new trend, like when Kijun goes below SSB this way. You also have the push trend, like this push trend. So that's just for the continuity from the beginning of the downtrend. Like that's where you can start placing your position. And then the continuity bounce theory, what I call continuity bounce theory, is that the price moved to the downside like this, created a new V breaker, like at this level, right? Okay. Then the price moved back to up on this pullback. Is when the price arrive on this pullback like this that you can sell basically. So V breaker, that's bounce theory, continuity to the downside bounce theory. But the reversal, you get what I mean? The continuity is that the price where is moving down like this. When it break this one, the price must go back up, pull back on that break, then go continue to the downside. But if it was a reversal, this whole part would have been a buy for a whole continuity to the upside. But this one. So that's a little bit what I try to explain. So after that, we have near to the end of this whole downtrend, like when the price want to start moving to the upside, what you will be seeing is that is the one to take a course reversal to the upside using the TS2 theory. What the hell? Zoom, can you just hide yourself? So, for example, you can see that in 1 hour, in 4 hour here, we have TK course to the upside, TK course to the upside again in 4 hour. So that's already 1, 2 TK course, right? And then you also have the reversal bounce theory that is a little bit here. The reversal to the upside this way, this time around. You have the fact that the price moved down to this point, move back up, then move down again, right? That's what we had. And then this one was a V breaker to the downside. And then this part was a clear buy to the upside to this point. Okay. That is the reversal bounce theory. Now you also have the reversal Tenkani VRS as element to that will activate the reversal at that point, right? Because why is it the point of a node of reversal? It is because when you go on monthly, you have something like this, the price go back down and then must go back up and then create this one. That is normally the monthly path. Okay. Uh Normally you have a line like this. Okay. All right, right. So at this level, normally the price should have gone to the upside from this bottom. That's why I'm saying that on daily, the price go back down, go back up, then go back up. So after this V breaker, this part of the price is a clear buy. So you should have just gone on 50 minutes there and start buying, right? Start buying this. So lastly, will have been a reversal using Tenkan cover. Tenkan cover is also a reversal point. You can see many things. The Tenkan cover is a rare event. Like for example, this green candle has been covered to the by the bottom side with Tenkan like this. So okay, that's all for the size theory. This one will need you also to need me to do a lot of live prediction of the movement of the price live so that you can understand it. But that is actually element that you use to predict the market. So let's now look at the day to end theory. Day to end theory.